Forget for a moment what you see on the news. The most important conflicts of the 21st century, well, they're not being fought with tanks and jets. They're actually being waged silently in financial markets and across global supply chains. This is economic warfare. It's the invisible force shaping the fate of your portfolio, and today, we're going to make it visible. Sun Tzu wrote this more than 2,000 years ago. And honestly, it's the perfect way to think about economic warfare. See, it's not about open conflict at all. It's about systematically and quietly weakening your rival's economic foundations. The goal? To make sure victory is a done deal before any conventional battle is even on the table. And that brings us right to our first key idea, this invisible battlefield. Now, don't make the mistake of thinking this is some modern invention. Sure, the tools have changed, but the core strategy, using economic muscle for geopolitical gain, that's a timeless form of statecraft, woven right into the fabric of history. So let's get a really clear definition here. Economic warfare is the deliberate weaponization of economic tools to cripple a rival. And the battlefields? Well, they aren't fields at all. They're the stock exchanges, the shipping lanes, and the digital networks that make up the backbone of the entire global economy. This mind map really helps break it all down. Take a look at the key elements. Over on the left, you see the historical roots, this enduring pattern. Right in the center, you've got the tools, everything from sanctions to debt. And on the right, the outcomes, things like resource control and the creation of strategic scarcity. It's a whole system, and it's designed to create the slow, persistent pressure that destabilizes a nation from the inside out. Look, this is not a new playbook. It just gets updated for every new era. Empires have always spoken this quiet language. For ancient Athens, they called it safeguarding trade. For Rome, it was all about provisioning green. The 20th century gave us institutionalized embargoes. And the Cold War, a masterclass in using money and technology as weapons. The underlying lesson has never, ever changed. If you control the resources, you control the empire. The source material for this explainer uses a really powerful metaphor. Think of modern economic warfare as a well-prepared banquet. It's got all these different dishes, and every single one is carefully disguised as just harmless economic policy. So, what's on the menu at this banquet? You've got sanctions that basically slam the gates to the marketplace shut. You've got tariffs that tax a neighbor into submission. Then there are currencies that get gently adjusted until suddenly an advantage appears. You also have control over vital resources. And of course, the classic, debt. Always extended with a smile that lasts a whole lot longer than the repayment schedule. Let's just zoom in on one of the most powerful items on that menu, the weaponization of currency. I mean, it's a tactic that has been a recurring theme in conflicts for literally centuries. And here is a perfect historical example. During the American Revolution, the British didn't just fight on the battlefield. No, they had a much more insidious strategy. They flooded the colonies with counterfeit money. Why? To trigger hyperinflation and completely collapse the economy. The goal was pretty simple. If you can't beat their army, just destroy the economic foundation that pays for it. Okay, so let's fast forward to today. The battlefield looks different, but the logic has not changed one bit. The modern arena for economic warfare is the global supply chain, and the number one weapon is disruption. The core mechanism of modern economic warfare is what you could call engineered scarcity. By strategically disrupting the flow of critical stuff, oil, gas, microchips, you name it, nations can create persistent volatility and major structural shocks in their rivals' economies. And this chaos, it isn't some unfortunate side effect. It is the intended outcome. And here you can see the direct result of that. This is the U.S. Aggregated Chaos Index, and it measures unexpected volatility across all kinds of asset classes. Just look at the sharp, sustained spikes in recent years. This isn't just normal market noise, okay? This is the statistical fingerprint of geopolitical tension being deliberately injected into the global financial system. And here's a real-world case of a nation under economic attack. This chart shows Turkey's gold reserves just plummeting as it was forced to sell them off to defend its currency. This is exactly what it looks like to be a casualty in this invisible war. You're liquidating your most precious assets just to try and stay afloat. So, the big question is, what does all this mean for you as an investor? Well, this new reality requires a completely different playbook. The map of where capital should go is literally being redrawn right before our eyes. This diagram really illustrates that fundamental paradigm shift for investors.
Over on the left, you see the old world: globalization, efficiency, a focus on low costs. But you have to understand, that world is gone. Over on the right is the new reality, a world that's defined by resilience, by securing your supply chains, and by having strategic control over essential resources. It's a complete inversion of the principles that have governed markets for the past 30 years.
Let me put it bluntly. The old paradigm was all about optimizing for efficiency. The new paradigm is all about controlling scarcity. If your investment thesis is still based on the rules of pre-2020 globalization, you are playing a game that is already over. This quote from the source material is probably the single most important takeaway for investors. The winners of the next decade are not going to be the ones who can squeeze another percentage point of margin. No, they'll be the ones who own and control the physical things the world cannot function without. So how do you position your portfolio for this? It really comes down to a few key principles. First, own strategic assets, the real building blocks of the economy like energy and metals. Second, you have to understand that true safety now lies in physical assets, like gold, things that exist outside the financial system. Third, you got to recognize the new danger zone, long-dated government bonds. Why? Because in a world of persistent inflation and volatility, their fixed returns become a guaranteed loss of purchasing power. And finally, and this is the most critical shift, your priority has to move from seeking a return on capital to ensuring the return of capital. Navigating this new battlefield, it requires more than just a few tactical adjustments. It really demands a fundamental shift in your strategic thinking. And this brings us to the ultimate question, doesn't it? As an investor, as someone who is stewarding wealth in this new world of engineered scarcity and weaponized finance, how do you not only protect, but actually position your capital for everything that's coming? You see, understanding this new battlefield is the first crucial step to navigating it. For deeper strategic insights that are tailored to your portfolio, you can contact the Macro Butler directly. The email and website are right there on your screen. In this new era we're in, being prepared isn't just an advantage anymore, it's everything.